everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now. Hi, everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now.
So this month's webinar is Closing the Insurance Customer Protection Gap. It's really based on the recent research that we just published. And it is primary research out into the marketplace that does look at customer generational differences in terms of their risk, their readiness, and the coverages that they really kind of view from a protection gap standpoint. So I would encourage you to also download the copy of the full report. It'll be myself, Denise Garth, Chief Strategy Officer at Majesco, and then Glenn Westick, Vice President at Majesco. So let's go ahead and get started. All right, let's talk about the big picture in terms of the kind of three key protection gaps that we uncovered as a part of this research. First off, as many of you know, we do have a growing protection gap globally, and that protection gap is actually estimated at $9 trillion, with 30% of it associated to property and casualty types of protection, and 70% associated to life, annuity, and health types of protection. And what's really driving this protection gap are really four key factors. One is the rising risk, obviously, that drives additional claims that then ultimately drives increased insurance costs. The affordability strain. People are really struggling with being able to pay for the increased cost of some of their insurance due to increased prices, increased inflation, and interest rates. As a result, we still have a lot of people that are uninsured and underinsured and are not prepared for catastrophic losses that are happening. And we all know, at least I do personally, from Sunday and Monday, we have convective storms, which are now the #1 cat loss from a property and casualty standpoint in the U.S. And we had them again on Monday and Tuesday with a lot of severe convective storms with wind, hail, and tornadoes. And that's really driving a lot of catastrophic losses. And then finally, we've got price pressure on the generations. Millennials and Gen Z are just kind of getting their lives established, and Gen X and Boomers are entering or moving into the later phases of their life, and in some cases are on a very structured type of income stream if they are retired. What that's doing is that it is impacting overall the ability of trust, loyalty, and growth for insurance companies, because customers are becoming disillusioned with traditional insurance, that the costs are increasing, but maybe the value of it, they just don't see as much anymore. They also have changing behaviors from a buying perspective, particularly on the life, annuity, and health side, from individuals that might be buying group benefits. They might be getting group benefits as part of being part of an employer, but they are moving jobs multiple times, and in many cases unable to take some of that coverage with them, or can afford to take some of that coverage with them. And so increased interest in more products that are more individual based, that are much more directly from an underwriting perspective tied to them, and that they can more easily take. And then there's the pressure on just acquisition of new customers, retention, overall profitability of insurers that have struggled in the last few years. And that all has an impact on brand trust. So when we looked at this from a financial risk perspective, here are the three key protection gaps that we identified. One is lifestyle, the second is financial, and the third is safety and security. And you can see the breakdown by generational group. By far, financial is the biggest area of gaps and risk category through the research that we found. And it really reflects all of those factors that I just talked about, because they all kind of have an impact on financial security in one way or another. But the interesting thing about the safety and security gap is that that may have been thought to have been covered by traditional insurance, but they are actually identifying ways that they may need other types of products to be able to cover some of the areas that are emerging there. And we'll talk a little bit more about that. So when we look at the core protection gap crisis, you can see here in the dark blue is that based on these different types of products or these different types of areas that they feel that they need to have protection, the dark blue is how prepared do they feel. And the light blue is that an importance. So the difference between importance and preparation is the gap. So you can see there's a significant number of areas that there is a large area of gap that in the light blue or the gray, it is entering into the important stage of being prepared to very important. And yet that many of the blues, they're in a neutral position. It's kind of like neutral pretty much across the board. A few of them are kind of up and down. The only ones that really are, the gap is nearly identical to importance and protection is down in planning and saving for college, and then lawsuits, from injury caused by something on your property, typically covered by umbrella insurance. Most people feel that they're fairly well protected there. Everything else is up for grabs. And that gap is really what is driving some of the sense of a lack of financial protection. Secondly, from a lifestyle standpoint, not as many gaps. There seems to be more of an alignment between preparation and importance, but there are some key areas here that offer, I think, some standing back and kind of preparing or offering some products that could help close that. Most important one is the caring for aging or disabled parents and relatives, and then maintaining good personal health. And then obviously the pet, caring for a pet. Those are the three areas that really represent some really great opportunities to offer some products that can kind of close that gap. And this really reflects, I think, a demographic and lifestyle change for many people. Pets are kind of the big thing for younger generation, but it's also for an older generation, it's companionship. And everybody wants to be able to live longer and have a healthy life, and less of a medical perspective, having medical procedures. And that has increased substantially from an expectation standpoint. And then now we're getting into this squeezing of the generations, where we're trying to, raise the younger generation and take care of the elderly parents, and finding places and ways that we can actually take care of them in a cost-effective financial way. I know I personally experienced that with my parents, and their fear of having to sell their homes, or in the case of my dad, the farm, to be able to kind of protect them. There's a real sense of needing to make sure that there is financially and from a lifestyle standpoint, the ability to really take care of them. The last one that I mentioned was the safety and security risks. And it's been a traditional strength, but there are emerging vulnerabilities here. And you can see that from a preparation to an importance perspective, cybersecurity and ID theft are the two top areas. And we all know about the scams that are out there from a cyber perspective, but increasingly the ID theft one is one that is really hitting particularly the elderly. They get caught up in, getting a phone call or a text or an email, and they don't realize that it is really kind of a scam, that they're going to be able to take their assets or whatever it may be. And that's becoming a really big area of concern and focus. And so those two areas in particular are areas that people are really looking for some kind of a protection from a safety and security standpoint. On the opposite, on the far end, they're much more prepared, and in relation to the importance, they're over prepared in some cases, as it relates to home security and property damage from wildfires and earthquakes. So people feel more prepared on that, and it might be because it's much more centralized. Many homes now do have home security systems, with things out there that they can leverage. And while wildfires have been a topic in the news, it seems to be somewhat concentrated in some areas. So the level of preparedness seems to be there. So Glenn, over to you. I know that you wanted me to leave it here, right?
No, I think we're ready to go to the next one. So I'll just take it over here. Oh,
Okay.
too far. Sorry. Okay, so thanks to these. So yeah, we just got an overview of some of the key gaps on an overall basis. So financial risks create the biggest gaps, and then you saw when you broke it down to the specific things, there's a lot of things that make up that financial risk, and there's a lot of areas for improvement in making more preparedness and protection. But to dig in a little deeper about, why do people feel, why do the people rate their preparedness and protection? We wanted to see first, what do they already have in terms of insurance products, or what types of planning do they do? What type of things do they have in place that they could use to manage some of these risks? So we asked early on in the survey the types of products that they had from a whole list of different products. And so we'll go through these first and kind of give you a baseline to understand what they have and what they don't have. And then we'll talk about how those impact or have a relevance to their ratings of protection. So in this slide, first we're going to look at the lifestyle-related products and services, and just going to set up the chart for the next 3 slides here, just so you know how they're constructed. You can see that there's 2 rows of labels on the x-axis and the horizontal axis. So the first row are the products and services that we asked about. We asked, do you or anybody in your family have or use these particular products or services? And it was just a simple yes, no checkbox thing. And then the bottom row is represents the lifestyle activities that we also asked about that kind of correlate or are related to those particular products and services. So in this chart, you can see there's one of the interesting patterns that we see here is that the 2 generations are prioritizing very different types of protection products, which kind of reflects where they are in their life and how they think about risk. So Gen X and Boomers appear to be more engaged with traditional health and protection-oriented solutions. They're also more likely to use things like fitness trackers, not tractors, critical illness insurance, regular medical, dental, and vision checkups. So that kind of indicates they're really taking a more proactive approach to both preventive care and financial protection around health risks. But on the other hand, Gen Z and Millennials, they seem to lean more heavily into more lifestyle and experience-driven things. Things like, again, like Denise said, pet insurance, wedding and event insurance, second home insurance coverage, and smart home monitoring solutions for aging relatives. So these products that seem to tend to be tied to more major life moments or personal experiences in convenience-oriented living. And then when we take all these things, all these different products together and on a cumulative basis across all the products and services, we just add up the percentages that they say they have these. Gen Z and Millennials come out with a 54 percentage point usage advantage across all these, but it's probably strongly driven by their much higher usage of pet insurance, higher use of wedding and event insurance, and smart home monitoring devices. But another interesting takeaway that we'll talk about more is parametric insurance products for things like travel disruptions and event cancellations. So adoption here is pretty even across the generations. So it's not really, doesn't come across as a niche product that's targeted at any specific generation. But overall, the penetration seems pretty decent. It's about 50% for both segments. But again, could just be that it's maybe just catching on, and that usage could grow.
I do think the point here, Glenn, that's really important is that if you're targeting, particularly say we target the younger generation, and you're trying to establish them as a customer to be able to cross-sell to them over a longer period of time, Some of these, what I call non-traditional types of products that are really, tied to what their needs are, allows you to more efficiently and in many ways inexpensively establish a relationship with them that you can over time as their lifestyle changes, their incomes increase, you can actually begin to actually offer them other types of products. So looking at these as both just a gap is one way, but also looking at them as a way to kind of reach that market in a different way, rather than thinking you have to go through the traditional life insurance, term life insurance, or homeowners insurance. It might be renters insurance. So thinking about it in terms of them and their needs allows you to kind of establish that relationship.
All right. So now in the financial risk protection category, products and services, Gen X and Boomers actually hold this advantage now, a net 56 percentage point usage advantage over Gen Z and Millennials. So it's kind of flipping the script from what we just saw in the lifestyle categories. So Gen X and Boomers, they're showing consistently higher adoption of kind of more longer term, asset or retirement focused products like retirement annuities, their investment accounts for 401ks, IRAs, health insurance and umbrella insurance, and all, to protect their accumulated assets. So we think these patterns, this pattern of Gen X and Boomers reflects that they're consumers who are either approaching retirement or they're already in it, and they're very focused on preserving their wealth and maintaining financial stability after they leave the workforce. But on the other hand, less than half of Gen Z and Millennials report using many of these different products and services. Their only meaningful leads over Gen X and Boomers are in the savings and usage-based solutions. So college savings, which again, it maybe makes more sense, but they're also more interested in the direct cost control of things like pay-as-you-drive auto insurance. So Denise, any other color commentary?
I think that one pretty well, Glenn.
All right. So now we'll go into the final category, the safety and security. So when it comes to the products and services for this category, both of the generation segments are just about dead even on almost all of these. There's just a 5 percentage point net difference between the two. So again, this is kind of an indication that these are the types of risks and are pretty much equally familiar to both of the generations. They're most familiar, the most tangible. So there's not a whole lot of difference between the generations and how they approach them. But that said, again, the penetration of most of these products still is just hovering around 50%, except of course for the really traditional stuff, the auto insurance and homeowner renter insurance. So those most common types. We also saw earlier that cybersecurity and ID theft were really the only categories that had a big safety and security protection gap. And here we see that the generations, they trade kind of slight leads with each other in terms of having insurance for these risks, yet it's still just hovering around 50%. So there's definitely more opportunity there, I think, for closing that gap. And then again, parametric. Finally, I thought it was pretty interesting that the penetration of parametric insurance is pretty similar for both the generation segments. Again, just like we saw in the lifestyle chart a couple slides back. So this type of insurance, it's been around a while, but it seems to be gaining ground as we are experiencing more and more of these extreme weather events and climate events. But again, the penetration is pretty decent, but still relatively low compared to traditional insurance. But again, I think more opportunity for that category to grow.
I do think that in some of these cases, if you don't necessarily offer the product yourself and want to, develop it, price it, et cetera, this is where partnerships can come in, particularly in the parametric area. Whether it's flood or it's other types of parametric offerings, I think once again, that's a type of product that can establish a relationship with customers, help them in a short-term, need type of perspective during a loss, but also develop a greater trust and loyalty to the brand. So while you may not necessarily offer these individually, partnerships can help you do that to be able to reach those customers and grow that customer relationship and retention and loyalty.
Right. Okay. So next section. So we've just kind of gone through what consumers say they have and what they don't have to protect and prepare themselves for these risks that we've been talking about in these different categories. So our next step was to see how much influence these products, if you have these products or you don't have them, how much influence do they have on kind of like your back of mind, top of mind, subconscious confidence about your ability to be prepared and protected against these different types of risks. So in other words, we were looking for what kind of a lift do you get in perceived preparedness and protection if you have these products and services. So to do this, as you probably would guess, we divided the people into two groups. One group that said they had these products or services, and the other group that said they didn't have them. And we compared their perceptions on how prepared they felt to manage the risk. And then we charted, in the next few charts, we'll see the lift that they got from having those products over the people that didn't have the product. So we'll start with in the lifestyle group. Here we can see that all the products and services that we asked about created a lift in the perceived preparedness across both the generations, except the only exception here was the cancer and critical illness insurance for Gen Z and Millennials. There was like no lift at all there, just kind of didn't seem to have an impact. But overall, Gen X and Boomers had a higher net lift advantage over Gen Z Millennials of 34 percentage points. So that occurred even though they didn't lead in all the specific product categories. But the strongest lifts we saw occurred for products that were tied to things that could be considered probably more high stakes or infrequent or asset intensive lifestyle risks, like insurance for second homes, wedding event insurance, and parametric travel insurance, especially for international travel is kind of interesting. But these last two, again, reflect the value of parametric insurance, really reinforce the value of clear event-based coverage where there's a financial exposure. It's focused or it's concentrated in a specific place and time, and the outcomes are binary. So in other words, a peril either happens or it doesn't happen. And if it does happen, then there's a payout. So that's definitely giving people a lift in their confidence and preparedness. Denise, anything from you?
Nope. You can go ahead.
Okay. Our next category is the financial protection products and services. And here we saw some of the biggest lifts that were delivered by some of these financial protection products. But again, they're highly segmented by life stage and product complexity. But the net result here is that Gen X and Boomers have a pretty large 92 percentage point net preparedness lift across all of these different products when you add up the lifts. So for them, traditional long-term financial instruments seem to generate the strongest impact. So investments, like their 401ks and IRAs, they drove a 37% lift in their retirement preparedness and a 19% lift in confidence around having Social Security having it available. And retirement annuities also delivered double-digit gains in both of these areas. So another category, health insurance and Medicare-related products were also a standout for the Gen X and Boomers. They had 33% lift in preparedness for pre-retirement healthcare costs. College savings plans were another item with one of the strongest lifts for both segments. On other items, the Gen Z and Millennials were showing different patterns. So for them, investments and annuities still had a lift in their preparedness, increased their preparedness, but the lifts were smaller. And that probably, again, reflects that they're further away from retirement and long-term financial milestones compared to Gen X and Boomers. But they did also show some of their strongest lifts from some of these specific financial protections are more clearly bounded. Some that were longer term, such as long-term care insurance. So thinking ahead, might need long-term care insurance down the road. College savings plan, probably more near term, but then also funeral and final expense insurance. Again, could be long-term for them, or it could be a family member they're thinking about.
So I think what this highlights is that the silver economy is real, guys, in that there is a real strong desire to have some coverages as people move into retirement. And it's not just about the health insurance, to supplement, MedSup to supplement, what you get from Medicare, but also vision and dental that you no longer have if you're no longer employed. But even more important is how can they help in college savings? It's really the transfer of the assets to be able to kind of put maybe in for their grandchildren, that type of a thing. And then from an investment perspective, how do they take their 401k and how can they put that into a single premium annuity to be able to have a guaranteed revenue stream? How do they actually acquire their assets? Those are the types of things that Silver Economy is really looking forward to, and it's a great opportunity for insurers to be able to kind of support that. Term insurance is still really important to that Silver Economy. On the contrast for the younger generation, as Glenn said, college savings is a big deal to be able to kind of save if they've got children. But I think this long-term care one is an interesting one. Why is it so important to this younger generation? I think it's because they see the costs of long-term care for their parents or their grandparents, and the significant need to be able to have that covered somehow or other. I think that they're very aware of that, and I think that opens up an opportunity for preparedness for a longer period of time, even if it's 20 years down the road, to be able to buy it now where it's going to be less expensive than if you actually bought it, when you're closer to retirement or at an elderly age. So I think kind of looking at these products at a different way and how you go to market with them and how do you reach these different market segments, it really is really important, not just to kind of plaster that we have all of these products, but how do you really kind of hone in on those segments of customers that really see things differently and have different needs identified in the market. Glenn?
Yep, good points, especially about that long-term care. Okay, so the final category again is the safety and security. So here we saw that Gen X and Boomers have their strongest net preparedness lift advantage over Gen Z Millennials. Again, when you add up all of their lifts, the safety and security products and services, it's pretty strong, pretty amazing, 117 percentage point advantage. So every product or service in this category is creating more confidence in this older segment, which again, could be just a reflection that they've been around longer. They've got more experience with risks and insurance, and just it creates a stronger level of confidence in them. And again, talking about parametric again, I think it's interesting that the parametric products tied to severe weather, flooding, wildfires, earthquakes, et cetera, they're consistently higher lifts for the Gen X and Boomers. And they peak at 40% lift for parametric earthquake insurance, which was really one of the largest lifts we saw in the whole study we did. So again, I think this indicates perhaps that older consumers are just more aware of and they're more concerned about some of the greater exposures to property loss and the affordability of coverage. And they've got a clear understanding of the financial consequences of catastrophic events, and they see value in these parametric products. And again, Gen Z Millennials, they also get lifts in their preparedness from having these products, but in general, they're a lot smaller compared to Gen X and Boomers. Cyber insurance and ID theft insurance generate the strongest increases in their perceived preparedness for them, a 24% lift and a 21% lift. And it's also interesting too, I think, when you look at the baseline or standard products like auto insurance and homeowner renter insurance, these delivered the smallest lifts for Gen Z Millennials, just 2% and 7%, which again, maybe it could suggest that these products are just viewed as table stakes to this segment, rather than as just kind of valuable, vital, fundamental safeguards for the property.
And so I think that really highlights, Glenn, the point that we all recognize that we've got to have some base types of insurance, but that isn't necessarily going to cover all of the concerns from a risk perspective. And how do you either offer other products that will help kind of address some of the needs, attach it to an existing product as an example, and or partner with other insurers that are actually building and pricing and offering these products to the market. I think the more that we can actually address their baseline needs as well as the additional areas of gaps in a way that allows them to kind of choose products that they can afford and have them to some extent, attached or bundled or, offered. It really kind of establishes a different level of trust and loyalty to insurers over the long term. So traditional products are still there and still needed, but it's not meeting the entire needs of a customer base that is really changing their lifestyles. Risk has changed, and what their concerns are. Glenn?
Yeah. Good points. Okay, so this is the final section with the products we asked about. So in this section, we went back to the consumers who said they didn't have these products or services, and then we just explicitly asked them, well, what if you did have these? Would they make you feel more prepared and protected? So we had them rate how much they agreed or felt that it would make them feel more protected. And just, overall, we did find that among the people that said they don't have these products, many do believe that it actually would improve their sense of protection, especially in the financial and health related areas. So again, indicating there's definitely opportunity for closing these gaps. So we'll start with, again, the lifestyle category. So among the consumers that didn't own any of these products in this lifestyle grouping, the products that were tied to ongoing well-being and life events got the strongest ratings across both generations. So the biggest one is, the annual medical, dental, and vision checkups. That stands out as the most compelling item. In fact, we all should be getting those anyway. So, but they had pretty high likelihood scores of 3.9, 3.6 on the 5-point scale. Long-term care insurance for aging or disabled relatives and smart home enabled protection for elderly occupants also scored highly. So again, another opportunity area that we know this is definitely an area. There's concern about aging parents, and these are things that would definitely help ease that burden. We also saw there were generational differences that were suggesting that Gen Z millennials they're consistently more open to adopting these lifestyle protection products across almost every category here. It gave them a net lift advantage of 13% over Gen X and Boomers. Not huge, but they were leading in all these categories. And the younger segment gave higher likelihood ratings on all the products that we asked about, including fitness trackers, cancer, critical illness insurance, pet insurance, event cancellation, wedding insurance. These could indicate that they have stronger interest for products that address, again, experiential, family-related, preventive risks. Gen X and Boomers, again, also see value in these offerings, but their enthusiasm is much more tempered. And some of them are dropping, to just barely over the probably would not category. So they may be a harder sell if they don't have these products already. So Denise, what do you think?
Yeah, I think once again, it highlights some areas of product opportunity to bring some products to market, either as an attachment to a writer to an existing product or as a separate product itself, and a way to kind of engage customers in terms of how they're thinking and what they're wanting. I think that being kind of innovative in this way can actually extend, the relationship with the customer. It can drive some additional revenue, but in the longer term, I think it drives additional profitability via customer retention, because you're able to actually support those customers in a broader way rather than just through the traditional products. And, I think this is where some innovation can really come into play, and some partnerships as well, Glenn.
Yeah, totally agree. Okay. So here again for financial products, we saw that Gen Z millennials had consistently higher openness to adopting additional financial protection, especially for products that were tied to proactive planning and cost control. And that gave them an overall 10% net lift in expected preparedness across, again, cumulatively across the gamut of these financial protection products. Again, not a huge lift and a little bit smaller than that last one, but again, just overall showing a little more interest in these products that if they purchase them or use them, they'd feel more protected. So Gen X and Boomers still viewed most of these products as helpful, but they also reflected, again, a more measured, a little more tepid response compared to Gen Z and Millennials. It did have stronger alignment around Medicare-related coverage, long-term care insurance, and funeral or final expense insurance. So Denise,
Yeah, once again, I would just highlight, Glenn, traditional products obviously are still there, like the home and auto and some of the health insurance related stuff. The difference is that not everybody has access to all of those products. And secondly, once again, it's a variation of those products. So the pay-as-you-drive auto insurance, what's interesting to me is that all of these are at or above, most of them are at or above the neutral care territory, meaning that there's increased interest in these products. And I think it's time for us to kind of think about these products in a different way. And once again, how do we bring those to market to meet those needs?
Right. Okay. Final category I had was safety and security. So, how would safety and security preparedness improve if consumers who don't have these products and services would actually decide to get them? Well, across both the generations, we saw that auto insurance and homeowner and renter insurance received some of the highest likelihood scores, which again reinforces their role as essential foundational safeguards, really, rather than just these new discretionary add-ons. It's the core product everybody should have, right? Gen Z Millennials rated auto insurance as especially impactful, 3.8 on that 5-point scale versus 2.9 for Gen X and Boomers, which could suggest they've got this heightened sensitivity to the financial exposure related to autos, increased cost of vehicles and repairs. But again, it's kind of ironic if why don't they should have auto insurance, right? And there's just people that know they need it probably and would feel better if they have it. So this is kind of reflected in that particular rating. But beyond these core products, we can see that both segments expressed pretty decent interest in preventative and event-driven solutions, although there's still some variation. But overall, they're pretty close to each other. And Gen Z and Millennials gave higher likelihood scores across all the products and services, but their lead over Gen X and Boomers wasn't very big. And when you added it all up, it was just a 9% net lift in expected preparedness and protection. They have slightly higher interest in flood insurance, parametric insurance, parametric flood coverage, severe storm protection, wildfire insurance, earthquake insurance. So again, it suggests that they could be a good target market for these parametric solutions that are positioned as, enhancers to being prepared, preparedness enhancers. Gen X and Boomers also view these products as helpful, but with more, again, little less enthusiasm. But again, I think it still positions them as potentially good targets for them as well. And it could just be a reflection of, their more traditional approach for adding incremental coverage. Denise?
Yeah, I think what's interesting about this is a topic that as an industry we've been talking about, and that is about risk resilience. How do we drive risk resilience, in our lives and in the assets that we have? And I think when you look at many of these areas, once again, they're over the neutral area and moving into the, probably would and would definitely would. With the increased risk, whether it's weather-related risk, whether it's health-related risk, other types of risks out there, I think people are looking for ways to actually reduce risk in their lives. And while the insurance products can offer a solution to be able to, when a claim comes in, pay out the claim, et cetera, I think a bigger opportunity here is not only to offer the risk product, to be able to address it when a claim happens, but more importantly, help eliminate that claim. How do you drive risk resilience? Not just in, property that we often think about in terms of, climate weather and all of that, but it's more in their lives overall. So the things like, video surveillance for their property or cyber or ID theft, are there things that we can be doing, not just to offer the risk product, but helping to educate and provide them information that they can actually reduce their risk as well. I think that's a big factor in many of these areas of latent demand. It's not just about the risk product itself, it's how we actually engage with those customers to help them understand the risk and reduce it as well.
Yeah, good point. The whole idea of prevention versus payout, right? So that's definitely a positive area. All right, so we're gonna switch to our last topic about using artificial intelligence to help close the protection gap. So I'm gonna hand it over to Denise to cover this topic. Denise?
All right, so part of what we asked customers is their views about artificial intelligence and how that could help them close this protection gap. And we found some interesting, interesting points here. So the first area is we asked them, how do they feel about companies, the different types of companies that they use, and how they are using AI in their operations. There's not a big change between the two generational groups, as it relates to year-on-year kind of perspective. But what's interesting here is that if you really look at this, there's a significant number of these, once again, in that neutral moving into the positive area, that they actually look at the ability of AI to actually help them from a digital experience and a seamless experience, particularly for the younger generation that is probably much more adapt to technology and not necessarily as afraid of it. I do think that, what's really interesting is that what's happening at the top is the exact same effect that we had back when mobile was introduced and digital was introduced into the marketplace. The whole Amazon effect began to happen. I think we're going to begin to see that as well, particularly as the day-to-day lives are impacted by mobile phones and their Amazon accounts and all of those that are really embedding AI into it. And even in investments, look at that, the investments in bank accounts, the things that are happening in the financial services side. So at some point, we are going to have to, as an industry, understand that there is a whole different level of potential expectation that's going to arise, no different than the same expectation we had when digital came to light, and we had to have that Amazon effect, so to speak, but do it in terms of insurance and what we could do that was the right thing to do and also a compliant thing to do. So I think when we also asked them, do they think an insurance company's use of AI in their operations would improve some things? Pretty interesting here. It was, pretty strong feedback here that, and an increase pretty much across the board, although it was slight increase, that it would actually help in helping to, provide input on the digital, self-service area, or the digital self-service area for submitting for insurance. It could actually help, in maybe better pricing and all of those types of things. I think there's an expectation here. People are becoming much more educated around AI. And there's a pretty uniform, enthusiasm about it that if used right and used appropriately, it can really help them. And in some of those ways, back to what I said earlier, it's not just about doing the process. It's about how can we leverage it to actually help engage them and educate them and help them reduce that risk. There are things that we can be doing that aren't necessarily going to be about the pricing and the quoting and, all of that type of thing, but we can make lives easier. How can it help them do the first notice of loss much more effectively? How can it help them get the information that they need, that they can actually take action on their part to be able to reduce risk? I think those are really great opportunity areas for insurers to really begin to think about. And I think we're seeing now in the marketplace, based on some of the insurer earnings calls and some of the information coming out at different industry events, insurers are beginning to experiment with this and how it can actually help enhance and improve the value and the trust that you have with the customers. So when we kind of look at that, between how can AI be a bridge between concern and action, it really has an opportunity when done right, when done transparently, when done with, you can actually have auditability to make sure that we're meeting compliance requirements, from the regulators. it can really help insurers help their customers or potential customers move from awareness to adoption. So, many of the products that we talked about, there's a real latent need out there. There's a gap in protection. But many times they don't necessarily understand that. So how can customers actually find out about more of that information? So on your websites, on your digital experiences, moving beyond just being able to, submit, get a quote for a product or to do a claim or whatever, how can you use those sites to better educate and increase that awareness, help them understand that risk? And in many cases, make that even more personalized, that you understand their specific risks and what types of products can you actually begin to kind of suggest to them or offer to them. And I think that's where, they can actually help close the protection gap. We can begin to offer services when they really need it or products. And we begin to kind of, simplify how we really engage with them. Over time, I really do believe that it is going to actually help build trust and loyalty to insurers that are able to not just do things from a submission and whether it's from a quote to submission of an application to a first notice of loss, but really how you actually engage them in a much broader conversation, whether it's around financial risk, it's lifestyle risk, or it's security risk. We've got to start having those conversations to actually help educate and engage customers. And then that actually drives how they kind of look at the products that you have to offer for them in a whole different light, because it's based upon their actual day-to-day needs or their longer-term needs. So when we think about guidelines for action for everybody, first and foremost, go back to the very beginning. Financial risks are the epicenter of every protection gap, of the protection gap scenario that we have in the marketplace. We've got to find a way to actually begin to close that gap, because it is the overwhelming gap that drives concern of customers, the lack of coverage, and quite frankly, trust and loyalty to insurers. The protection risk is importance is great, but without preparedness. What I mean by that is that there's anxiety out there because people don't feel that they're very prepared. It's that latent gap that's out there. We've got to be able to offer some options for them, education and actual products, because there is an opportunity out there to grow your books of business, to grow your relationship with those customers by offering the types of products that they really want. And the products work flat out. Products, the insurance products have worked for a long period of time, but adoption has been the problem. And part of that adoption problem is that we're not necessarily understanding maybe some of the nuanced segmentation of some of these, whether it's by demographic groups or it's by lifestyles, whether it's different types of risks, all of that type of thing. We've got to have a better understanding of those customers on a more personal level to help drive that adoption. And part of that is going to be, how do we engage them differently? And I think that's where AI can really help it, by engaging them and educating them and having a different kind of conversation that then can actually drive to actual adoption of some of the products. Safety risk is strong, but the digital risk is the new vulnerability. Going back to that cyber risk and the ID theft, we really have an opportunity here as an industry, whether it's a new benefit that's offered as a benefit in a benefit plan, it's an individual product that's offered. It could be part of a rider attached to like a homeowner's type of a policy, or it could actually be something that is a product that's offered over on the life side. I don't think it necessarily has to fit in any one specific segment. It's a risk, and if they have a cyber risk and they have a ID theft risk, that leads to financial risk that could have an impact on their financial assets, whether it's their banking account, it's their annuities, it's their life insurance, all of that type of stuff. And the next one is really around these new products. There is more opportunity in the marketplace for new product and innovation of products than I think that we have seen or that we fully appreciate, because we're all still focused on much of the same thing. A lot of that is driven, quite frankly, because many of us are still operating on legacy systems. And those legacy systems don't necessarily offer the opportunity to be innovative with different types of products. They can't handle some of the products. Parametric is a perfect example. It requires a whole different type of process to be able to really truly offer those types of products. So there's an opportunity out there, but you're also going to have to look at how can you actually do it inside your organizations operationally and technically. And then finally, AI. Everybody's hearing about AI. We'll all hear about it at the upcoming InsurTech event in New York City. And there has great potential for us as an industry. And I do believe that it has an opportunity beyond just doing some things internally for insurance companies to drive better operational efficiencies that can improve pricing, which ultimately can have an impact for protection gap. Because if the pricing's improved, it makes you more competitive, but it also makes the product more affordable. It's more about how we can actually bridge the gap between education and understanding and concern and guiding them in the right way to the right products. I don't think there's a time, I think we thought we could do that with digital, but it's pretty complex. I think the opportunity is there with AI to really help accelerate that bridge and really create that bridge that we haven't seen before. So with that, that's the end of the session. We don't have any questions that have come up. What I would encourage you all is to please go up to the website, download the full report. It gives more details beyond what we shared today. And I would encourage you all to really think about how you're going to really kind of refocus the products that you have available today, the products that you might want to look at offering to the market, and how do you kind of position them in terms of this protection gap from a financial risk perspective, from a lifestyle perspective, and from a security perspective. I think if we talk openly about that risk and we talk openly about how those products can really help close that gap and meet their needs and expectations, I think there is an opportunity to strengthen the customer loyalty and trust that we have today, even greater for the future. So with that, thanks, Glenn, for your for the insights, and we look forward to seeing everybody next month.
Thanks, Denise. Thanks, everybody.
That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market-leading podcast series available wherever you get your podcast from. Thank you for listening, and be sure to tune in the next time.